Massive economic disparity today as certain businesses flourish and others fail. Certain businesses that were producing billions in revenue every year are now completely bankrupt. We are witnessing a scale of unlimited potential for failure. This presents future issues as well because the impact is truly unknown. The response from government, stimulus checks, and more Fed money printing. Excellent! This should work out nicely. You came here for the truth, so let me unveil that for you. Today we're going to talk about the disparity, the haves and have-nots, the rich and the poor. We know what's happening, and this happens in every single cycle. There are certain corporations that end up on top and leave others in the dust. We know that this has happened time and time again, and we see it on an exaggerated level today here in 2020. So I want to talk about businesses today. I want to look at the job situation. I've got some information about Canada as well. I'm also going to show you several charts to give you some perspective on what's been happening. Let's get into it right away. McDonald's, Chipotle, and Domino's are booming while your neighborhood restaurant struggles. A health crisis is creating a divide in the restaurant world. Big, well-capitalized chains are thriving while small independents struggle to keep their kitchens open. We have all heard about this. I'm sure you in your neighborhood have seen the little shops closing up. Maybe you know them personally and they're unable to stay open. The first wave might have been people simply getting rid of some employees, having them furloughed, as they like to talk about. But then time passed on and they were unable to keep them around. So what do? They lay them off. Maybe the store goes bankrupt. Maybe they cut back in one way, shape, or form. But ultimately, the economic impact is felt for a period of time. The restaurant industry is getting split in two. Big, well-capitalized chains are gaining customers and adding stores while tens of thousands of local eateries go bust. And why is this the case? Well, you can see they have more capital. They have more leverage on lease terms, more physical space, more geographic flexibility, and prior expertise with drive-thrus, carryout, and delivery. Think about all of these systems that are put in place by these different companies that have been there for a long time, decades perhaps in some cases. Then you've got the mom and pop shop. They never used Uber Eats. They didn't have DoorDash, and now they're just trying to adapt to it. They don't have an outdoor dining scenario. How are they able to survive this? Those big companies are able to do so and scale at the same time. So of course, there has been truly two separate stories going on at the same time, and you could see it quite evidently in the restaurant industry today. Fewer cooks in the kitchen. Independent restaurants have shed more of their workers this year than chains as the industry takes a bigger hit than it did during the last recession. Many more restaurants are projected to close for good this time around. And it's just trying to compare what you saw during previous recession and now. You could look at these different charts if you are interested, but I think it's pretty obvious what we have seen today and how strong the impact has been. Off menu, people are spending less than during the last recession at restaurants, particularly smaller independent ones, straining the finances of many businesses. If the businesses had been closed, if people weren't able to walk in, surely they are not going to be spending money there. There have been different things like the food delivery services. Some of the places started to open up directly on the road. Other restaurants had to retool and started to do some different types of things. Maybe they opened a market inside their restaurant and so many different things. But the point is that it wasn't their normal revenue stream. It wasn't as abundant as before, and so many of them failed. Air Canada slashes price of Transat deal, and you know that the airline industry is taking an absolute beating today. So what are we going to see? More mergers and acquisitions. Already, the price that people pay today, if anyone has ever flown out of Toronto, they would know it is just astronomical. Go over the border, 1 hour drive, and it's a 50% difference in many cases. It is absurd. And now with less competition, it's only going to get worse. That's what I worry about in every single recession, that there is going to be weaker companies that get bought up by the bigger companies, generally those bigger companies being helped out by the government, by the way, getting their stimulus. You as an individual don't get anything, maybe get the breadcrumbs. They overtake everything that's left, everything that's worthwhile, and you as the individual consumer have to pay more in the end. How does that sound? More news about Canada. You could see that Trudeau has essentially brought in new methods of helping out businesses, and this time specifically helping pay rent. The Canada Emergency Rent Subsidy will provide funding of up to 65% of rental or mortgage costs for businesses suffering from revenue declines. So we know what's been happening here. Obviously, this is a problem for the average individual. They've got these mortgage moratoriums, rent moratoriums. Nobody's getting kicked out. Nobody's getting evicted in a lot of places. The same thing goes on the commercial side. But of course, there is all of this money that is not being paid back. So the government steps in and tries to do their best to help out, to support. But in doing so, they are building up debt. They are increasing the deficits, and they are only compounding the problem in the end. There is no resolution that the government can provide. You could argue what they're doing here at least gives some temporary relief, but it cannot actually find resolution from simply putting more of this onto the backs of the taxpayers. That's what this is. I know that a lot of people think, well, the government got to help. The government's got to help. But in this case here, if you look at it, it's just being funded with your tax dollars. This article here is talking about retirement, people's savings, and so on, and I wanted to touch on a couple points because what we're looking at today is a huge group of people that are simply unprepared for what we are dealing with. They think that their pension fund is actually going to be paying them out what they suggest it will today and previously. Oh my goodness, that is just so far from the truth. And we have seen time and time again how many different pensions have been slashed. It doesn't happen in all cases necessarily, but certainly many of them will. I've told you about the former California governor saying, next recession, we are going to have to cut pensions. You're not going to get what you need. But the Queen of England, the Queen of Canada, the Queen of Australia, she gets a bailout. She gets your money. They're topping up her allowance because her situation got a little bit worse. But all hail the Queen, right? Yeah, I know how many people love the Queen. Well, she's getting your money. It's one nasty brew, a long spell of lower negative interest rates, a record level of public debt, a recession, and income inequality. Those are some of the elements affecting the welfare of retirees around the world, and they make the odds of a financially secure retirement ever more remote. Essentially, they put Iceland, Switzerland, and Norway at the top of these 44 countries on retiree well-being and financial security. The US at number 16. This is using 2019's data, so who knows where it will be when we look from 2021 back into 2020. It's going to be a mess. But a lot of people, every time we move through a cycle, they are much worse off. So many people have still not been able to recover from the financial crisis. A lot of individuals are still paying off last year's debt into this year, and the balances continue to grow. Part of what the article was alluding to was that you've got interest rates that are at record lows. If people are trying to save money, they can't do that in a typical savings account anymore because it's going to give you nothing. And here you're looking at UK, Japan, US, and Eurozone. All of the interest rates are basically at rock bottom today. So what do? Well, they take more and more risk. Your pension fund, which is supposed to be a guarantee, is giving you a certain level, but they need to be making, let's say, a 7% return. Depends on the pension, but they're nowhere near that level. So what are they going to do? Well, they're going to be dealing with a big shortfall, as we see many of them. Will they get a bailout or will they slash the pensions? It's very important when you're looking at the economy to understand what's happening with shipping, with freight, with construction of all types, with buildings, infrastructure, and so on. So I bring that to you. I've got some points on that today, a couple articles. This one here first. Report. Crane counts in North American cities drop for the first time since 2017. I understand what's happening today because you've got so much uncertainty. Businesses need certainty. It's not necessarily about costs. If the costs are elevated, they can still do business. If they know, well, okay, it's going to be at this level. This is what we need to charge. The units need to be at this price and so on. But when there's a big question mark there, it becomes extremely difficult to predict. And when you can't do that, development really slows down. I want to congratulate Toronto once again, the biggest bubble in the world. And you can see right here, Toronto still holds the crown for most cranes in a North American city with 124, towering above all other metropolitan areas recorded. Crane count in US cities, the number of construction cranes in each city right here listed. If you are interested, just comparing 2019 numbers into 2020. So if you want to take a look, just pause the video or take a look in the description. Transportation capacity hits new lows, no relief in sight for pricing. If anybody has been moving stuff in and out, they know that there have been massive delays. Freight has been a real problem going overseas, coming in from overseas, and it doesn't seem to be letting up. All of this period of time, we're being told there's a recovery, but there's still a lot of the nuances which are terrible, absolutely terrible. This happens to be one of them. Robinhood and others have dealt with major issues over the last little while, particularly 2020. This is yet another one to add to the list. Robinhood users say accounts were looted, no one to call. Apparently they don't have a phone number for support, so they saw their funds getting emptied out and there wasn't much they could do. They contacted the support. I guess maybe they have a chat in their app and they simply watched it all disappear. It could happen to anybody, probably not necessarily related to Robinhood, but people were tricked, they were conned, they were scammed. And unfortunately, this goes on so much today. It's unbelievable. There needs to be more security that are put in place, whether it's two-factor authentication or something else needs to be there. It is extremely important. Our data is at stake, and that is so key to understand. 3 charts from Real Investment Advice really quickly. Dollars of expenditures required for $1 of GDP growth. I've shown you a similar chart just recently, but take a look at this. Federal expenditures as a percentage of real GDP. Q4 fiscal dump on the right-hand side. 880 just to get $1 of GDP growth. This is unbelievable, unsustainable, and truly will end in disaster. Here's the total debt versus the GDP, and something I have shown many times before, but essentially as the years go on, you get less. You get less. That blue line there is the annual change in GDP, and you can see the trend. Even though interest rates have been declining in that period of time, you get less. It's not as if what they tell you, just keep decreasing the interest rates and suddenly everything's going to be okay. It hasn't worked like that throughout this entire period. 4 decades to learn that lesson, and here we are, still repeating the mantra. Left-hand side, 3 phases of real GDP trajectory shown you in the trillions of dollars. All I wanted to highlight here was that they claimed there was this trend of growth at this level and would continue at this level. We know that that's not the case because there's always going to be recessions. There are always going to be setbacks, and that growth can't even get back up to where it was previously. There will be more pain and suffering. Unfortunately, that's the way it is. This is why I was telling people years and years before, get your fiscal house in order, get this done. But no, people push it to the absolute limits. And what happens? They get swiped up under their feet, and unfortunately for many, they are relying on the government right now today. The government wasn't prepared, that's for sure. Many of these corporations weren't prepared either, and individuals today suffer the consequences as well. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to learn about e-commerce, you want to understand how to make money online, I have a free e-course that you can get at the AmazonGPS.com. If you want to understand the financial system, I have everything you need to know to ask the right questions, to be empowered, to prepare for you and your family. Definitely check them out at the link in the description. If you want the audiobook instead, themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? A lot to cover, and this one has so much in it. Definitely check it out. Click it. I'll see you there.